expert, and he is also the owner and founder of KPA Agency. I want to thank him for sitting in with us. I'm sure Larry would like to thank him for sitting in with us.
Yeah.
I want to introduce Mr. Kevin Ards. How you doing, brother?
How you brothers doing?
Hey man,
good,
you know we out here, man.
We good, nope.
Hey, look, you know this is something that's supposed to have been in the works for a few months now, man. And considering that you office in different areas around Texas, you work all over the country. I want to thank you so much for really carving some time out of a busy schedule to sit in with us on Thursday. So first thing first, introduce our audience to the KPA Agency, what it is that you do and how you help those business professionals, entrepreneurs, movers and shakers protect their most valuable assets.
That's right.
Okay, KPA Agency, it's an agency, insurance agency. We specialize in life insurance, and that's term, that's whole, mortgage protection, as well as retirement planning. It's a passion of mine. It's something that everyone pretty much don't want to talk about, and it's tied to death.
Yeah.
Unfortunately. So that's one of the things that we pride ourselves on, protecting people for if, when that time happens, that burden of whether that's protecting the mortgage, making sure that the mortgage is paid off, making sure that you can do the burial. We've all have seen it on Facebook, a GoFundMe page for somebody.
Fish fries, fish plates, yeah.
So it's something that, we definitely focus in and definitely, during this pandemic, it really kind of opened a lot of people's eyes a little more. When we were younger, we knew that our parents probably had a whole life policy on us. But now, with the pandemic, no one really knows how everything is, what's going to happen to you, or if you catch COVID, if it's going to do anything to you. So right now, I mean, unfortunately, businesses, or it's kind of unfortunate, but definitely fortunate that, insurance is a thing. It's ever evolving, just like, every single day, dealing with COVID. But I tell everyone, if you can get insurance, get it today. Once you're gone, it's too late.
I've had, and everyone in our audience may not have the luxury of having an insurance professional like you in their personal circle of confidants and friends. But one of the things that you've had the chance to educate me on is that, like you mentioned, most people have a defensive response when you want to talk about a death benefit. But one of the things that your company provides is a living benefit. So could you just share with our audience the difference in mindset when you're approaching people from that perspective? And can you share a little bit about the living benefit products that you offer?
Okay. Mortgage protection has changed. Prior to 2010, for example, if you had mortgage protection, the only way you can utilize it if you passed away. So it's basically, it did not protect the individual. It paid your mortgage off, so it's protecting your lender. After 2010, we all know what happened was the industry started to change because people were getting sick. You're getting diagnosed with cancer. You're having strokes. You're having heart attacks. Well, you're surviving. And when people tried to actually utilize their mortgage protection, well, you didn't pass away, so you couldn't use it. So I'm paying for it, but I can't actually use it. So 2010, the industry kind of took a step back, looked at everything. And so basically what it did was mortgage protection, and the easiest way for me to explain it is like a life insurance 2.0 policy. So if you have a mortgage protection, let's just say your policy was for $100,000. We're just going to do it simple. It's $100,000. If you pass away, well, your beneficiary, whomever that may be, is going to work like a life insurance. They get paid $100,000. They can pay the house off. But what happens if you get diagnosed with, prostate cancer? You survive. Typically, when you have something like that, you're going to be off work. You're not going to work tomorrow. You're probably not going to work in 2 weeks.
Exactly.
Right. No doubt about it.
And then if you're a W-2, there's only so much benefit time you may have. You might have sick time. You got to utilize your vacation. So you're out on FMLA, which only probably lasts about 12 weeks. So that's 3 months. When you're on FMLA, you typically don't get your full. You don't get your full pay. So already most people are actually living paycheck to paycheck. So now you maybe only get 60% of your payment, and you're doing treatment. You got to pay the high deductible with your health insurance, with the best insurance,
medication,
and you got to pay your medication. You got to pay your copay. So the way mortgage protection works now, like I mentioned earlier, it's works like a traditional life insurance. If you pass away, your beneficiary get the amount. But if you get, say, cancer, you have a heart attack, you have a stroke, you get diagnosed with ALS, you have organ failure, kidney failure. Also, if you can't perform 2 of the daily living activities, I'm talking about if you can no longer feed yourself, bathe yourself, put your clothes on, you can't get in and out of the bed, so transferring yourself in and out of the bed without someone assisting you, you can file a claim. And then also if you get diagnosed with something terminal, you can file a claim. So living benefits in most policies is up to 18 different illnesses or ailments that you can actually utilize. So you basically do not have to die to utilize that policy. So that's the great thing about mortgage protection. A lot of people are totally unaware of it. When you're talking to an insurance guy, we refer to it as living benefits. So it's basically it's added onto the policy at no extra cost as well. So it's built into the policy. So KPA Agency, actually, we focus on that. Do we do traditional term and whole life? Yes, we do. But we always try to work with our clients to get the bang for their buck. Why pay for something that you can't utilize? Well, if you have a policy, and a traditional life insurance policy that has no living benefits, you will never get to use it. Why? Because when you got to pass away for that policy actually to pay out. That's right. So you don't get the benefits. So you're paying for a monthly policy that only your beneficiaries get to utilize. So
that's deep. Right. No, and it's funny, and I appreciate you so much for your candor, Kevin, because Larry and I both, when we started this platform, we wanted to be able to have honest and open conversation while at the same time providing our audience with a chance to not feel defensive, feel attacked, or feel as if this conversation is something that they couldn't have with someone that was a close, trusted confidant. Larry and I talk a lot about how with the real estate market, especially here in Houston, it's been growing so rapidly that those people who own homes have been enjoying a lot of asset appreciation. Which for someone like yourself that is in protecting assets, most people who have insurance right now, could you talk to them a little bit about why it would serve them best to reach out to you to see if the policy they have is enough to protect their growing asset as the real estate market here in Texas continues to flourish?
Yes, definitely. If you already have mortgage protection, for me to go through their policy, no charge or anything like that. My best part of my job is educating people about it. A lot of people, you get your policy, you put it in your safe, or a lot of times when someone passes away, you didn't even know they had a policy. So you're looking for it.
Every time.
So you're looking for it. And then you don't know how much it is and things of that sort. So the first thing I like to do is actually sit down with my clients and kind of educate them if they have a current policy, review it with them. There's a lot of terms utilizing insurance. You may see something that says critical, chronic, or terminal. Terminal is pretty much self-explanatory, but no one knows.
But the other two can be a little blurry.
So critical and chronic. So those are the things like heart. Like if you have a heart attack, you have a stroke. If you get diagnosed with cancer, those are your critical, and then your chronic is more like your daily living activities. So I go through that, review it with them, and then I'll see. Definitely when it comes to mortgage protection, I'm always talking to the client. First thing is how much is your mortgage. Also, if you have any equity in it. We live in Texas. It's the equity in homes is skyrocketing.
That's right.
Absolutely.
So the first thing I always tell my clients is, like, if you have equity in your home, if you pass away, you want to protect it.
Yes.
That's something that's free. That's free money. And if you're not protecting your mortgage, that's money that you basically, it's thrown away. Let's just say if same example, if you have $100,000 and that house goes into foreclosure, and then that home has another $100,000 in equity.
Yeah,
well, that's $100,000 that is just lost.
Real talk. That's facts.
So that's the first thing. We sit down, we go through your equity, we go through see what your monthly payments are, because some people, a lot of the clients, they may not want to cover their full mortgage. So they just want to pay, cover just half of it, because they say, hey, I got a 30-year mortgage. I've been in this house for 15 years. I only have 15 years left. So I don't need to cover their entire thing. Or you have some of my clients that's actually, when I'm sitting down with a client, I'll ask the husband, something happens to your spouse, would you keep your home? They give me an answer. Then I ask the wife, if something happened to your husband, would you keep the home? Typically, there's always two separate answers. One person is going to keep it.
One person going to sell it.
The other person is going to sell it.
No doubt about it.
So typically with those clients that actually want to sell it, there's no purpose to protect that whole entire home to pay it off, because they're already in that mindset. They just need enough mortgage payments to buy time to actually pay that, to pay that home. So we can look at different options. So it's not necessarily we build the policy for, whatever suits your needs. So
Makes
if you
sense.
just want to say, hey, I just need to cover the mortgage for 6 months. So, if my monthly payment is $1,000, so I just need a mortgage policy for $6,000. So when I pass, it gives them 6 months.
No
I've done my
that
part.
Makes sense. Yeah.
And then they can take that equity in that.
Yeah.
Because, it also goes into cost. Whenever dealing with any kind of life insurance, as you get older, every year the policy gets more expensive when you're looking for quotes. So if you were 44 today, and then say in 5 months you turn 45, then you actually may be your quote may automatically go over to a 45-year-old, because most companies have the closest age, nearest age. So if you're 44 and your birthday is within 6 months, they automatically quote you as your the closest age, your next age.
And I thank you so much, Kevin, because you're right. In insurance, there is a lot of jargon that consumers don't understand, that professionals see as ABC 1, 2, 3, and I hope members of our audience have had some of those questions in their mind kind of answered. But we're going to break to hear from our sponsor. When we come back, I want to talk to you a little bit about your life before entrepreneurship and what motivated you to build your own real estate company. I want to thank everyone for tuning into the Prime Real Estate Network podcast. We're going to take a short break to hear from our sponsors, but we'll be right back.
I'm serial entrepreneur Larry W. Brooks, and I'd like to personally invite you to take a closer look at the Pure Hustle clothing brand, along with several books that I've authored to take entrepreneurs, small business owners to the next level of their business. So please take a look at shoplwb.com. How do you survive?
3 years ago,